Hello, this is Erin Swenlin from DecisionPoint.com with your Daily 5. I'm recording this on October 2nd, Friday, so let's go ahead and take a look at what the charts have to say. These are the charts I want you to look at. So today, not a great day currently. Obviously, the big news today is that President Trump was tested positive, for COVID-19, along with the First Lady. Seems to be shaking up the market. I have to wonder if this was going to happen anyway when I look at this chart. Yesterday when I did my decision point alert for my subscribers, I noted that we finally had broken above this area of resistance that was formed by that February top. And so I thought that was really good news to see. And I'm going to show you a few of my indicators as we move along that really were saying that we were looking at more upside. So it's hard to say if what we're looking at today is news driven or if it's really a sign of just some overbought indicators and overbought price. So, it looked like we had a nice impulse to the upside, but today, obviously falling below that area that was resistance, continues now to be resistance instead of support. All right, so looking at the other indicators, one of the reasons I was feeling fairly positive and bullish about this move to the upside, at first we looked like we had an island, and then we had the trading from Wednesday, set up that big long wick on the candle. So, at that point, it really looked like we had a shooting star and we were going to see a decline. But the fact that we broke out, I thought was very bullish. We are seeing the PMO turning up. It has decelerated somewhat on the decline so far today. What I did notice too is that the VIX, we were looking at it. Now I invert my VIX just so everybody understands why it looks the way it does, because I feel that oversold is at the bottom and overbought should be at the top. And of course, if you invert the VIX, that makes a lot more sense because complacency is near the top. And that's when you usually see that reversal to the downside. And the other way, of course, is when you get these big moves down on the VIX on the inverted scale, which of course makes them higher. It means everybody's very nervous. And usually that's a sign that you're going to get a move to the upside. So we were getting also, along with that rally, we were seeing the VIX moving and staying above its moving average. So that was pretty positive, but then we're back just below again as people are getting more nervous based likely on the news today. And I know there's still news about the package that's coming out eventually when they can vote and come to an understanding. So there's a lot out there that could be stirring things up. I did like the looks of my charts yesterday, but obviously we're getting quite the pullback right now. I wanted to show you our market bias chart. And the great part about this chart is that it shows you both our short-term Swenlin trading oscillators as well as the ITBM and ITVM, our intermediate term breadth and volume momentum oscillators. And it gives you a really great sense of where the market is with a bullish bias or a bearish bias. And that really depends on the green that you see on the chart, whether it's overbought or oversold, and then of course the neutral setting. So right now, the short term, we had a really nice pop on these indicators. It did, however, put us in somewhat overbought territory for these indicators. So while I was bullish yesterday, I was a little bothered by the fact that we're now hitting areas and readings on the Swenlin trading oscillators that we really haven't seen, at least on the STOB, since back here in early July. So we are hitting that overbought territory, which was my warning yesterday in the short term that, that could be a problem. But since it isn't extremely overbought and the bias here in the short term was looking bullish, it seemed to me that we could see some follow-on to the breakout that we had yesterday, Thursday. And, when I look at the intermediate term indicators and bias, everything is very neutral, right? We've got readings. They are negative right now, but very close to that zero line. And the good news is for the intermediate term is we are seeing these readings getting smaller and smaller. And that tells us that certainly there is a bullish bias to some degree in the intermediate term, just based on looking at the direction of where the ITBM and ITVM have gone. So looking at this OHLC bar chart though at the top, now we can see with that drop that we could be looking at that island again, an island reversal, which would say that not only are we going to get this downside move that we're seeing today, but it could mean a gap down and a test of support when we come down here on the SPY to about 320. So don't want to see that. And currently we are trading above that February top. So let's hope, and I don't like to use the word hope when I do my technical analysis, but we do want to have a little hope, I suppose, that this isn't going to, that this will not turn out to be an island formation, but it's certainly not looking good. All right, I wanted to look at the Nasdaq Golden and Silver Cross indexes, and I'm going to use ONEQ for the price movement. Now, the Golden and Silver Cross indicators are new indicators that Carl came up with. Let's go back here. And he wanted to somehow visualize how many of the stocks within a particular sector index were showing golden crosses, which I think most of you are familiar with, those 50 and 200-day crossovers. So when you get that 50 going above the 200, that means you've had a golden cross. Well, he thought it would be great, like I said, to look at how many of the stocks have a golden cross. And so when you look over here at our golden cross, you can see that as far as the Nasdaq is concerned, we had a nice rise in those golden crosses, but everything started to turn down, obviously, with the big turn on technology and the Nasdaq. And so we are on a negative crossover for that golden cross index. The other one I want to point you to is that silver cross index. And we consider a silver cross a 20-50-day EMA positive crossover. So this tells us how many components of the Nasdaq currently in a percentage have 20 above their 50-day EMA, or they're sitting on a silver cross. And so when I was looking at this chart yesterday, when I looked at the S&P, very similar looking chart, you can see that we have turned down here on that silver cross index, but it keeps trying to make that turn to get back up and cross over its signal line, just to give us that more bullish sign there. I wouldn't call it necessarily a buy signal. It's just giving us that understanding that in the shorter term, things might be improving here. And if we get that positive crossover, that certainly would be great for the shorter term. The Nasdaq BPI right now does have a positive crossover, and you'll see the exact same thing on the S&P 500. But we can see that today so far, actually, yes, today so far, we do have that turning down just a little bit, but it hasn't really been supremely damaged, if you will. And if we come down here and look at those percent of stocks indicators that we do, this tells us how many, the percent of stocks with price above their 20-day EMA. And as you can see, it's just about half of the Nasdaq stocks. And when you come down here, price above the 50, we're looking at a reading just above 46%. So you do want to see this kind of improvement on this chart. You want to see price moving above the 20 on more and more stocks within the Nasdaq. And you want to see price not only get above that 20, but also get above that 50-day EMA. And you can see that with these rising, this does tell us that there is some support within the Nasdaq to get to higher prices, because half of these are already showing that improvement with getting their price above their 20s and 50s. And you know, when you go to buy an individual stock, the 20 and 50-day EMA is what you're really looking at as well to make sure price is going the right direction. And I like to have price either just breaking above the 20 or 50 before I decide to make that trade. So it's good to see the fact that we are getting a rise on these, and we haven't gotten overbought really. Although you could say maybe a little overbought when you look in this thumbnail, because the readings are starting to challenge those previous tops. But I have to say, I mean, I think this looks pretty good. Seeing this move to the upside, it really isn't overbought, even in the shorter term when I look at some of these readings that we had. So I think there still is some support within the Nasdaq to get us back to the upside. Diamond of the week. It isn't from the utility section, but I'm finding that solar just doesn't want to go down. And so while I struggled on Wednesday I think it was Wednesday, or maybe it was Tuesday. I think it was Tuesday, maybe. We presented SunPower in the Diamonds report. And again, I kept waiting for a really good pullback on some of these solar company charts. Sunrun is one of the absolute favorites I have. I do own Sunrun, and I also own SunPower, full disclosure, but I'm finding that they really don't want to go down. So when I presented this on Wednesday, this is where price was currently. It had broken out, but it had closed right on this area of overhead resistance. We had that pullback. That was really the opportunity to finally get into some solar here with the renewable energy area. And we got the breakout. I kick myself when I see these beautiful breakouts and I don't see the chart as soon as I wish that I had seen the chart. But as you can see, we only came in about 3 days late on this move, of course, but it's been very, it's doing very well. And when I pulled this chart, it's up 4.6%. But I think it's a great diamond. I think that solar is still going to be a winner. Like I said, look at Sunrun. TAN is the ETF, another place you could be. The only warning I would say is that we are seeing some of these overbought conditions. We know that that led to a decline for SunPower previously. But we've got a buy signal on the PMO. Look at the volume coming in right now. I think a lot of people are ready to get on the solar bandwagon. So I think that this might be a great place for you to find your own diamonds. And speaking of diamonds, we do have the decision point alert that gives you everything you need to know every day as far as what's going on in the market, as far as what's going on with dollar, gold, oil, bonds, gold miners. You're going to see that update every single day in the decision point alert. You'll see those market bias charts I just showed you. And then we also have the decision point diamonds, and that is where I do my stock picks. You get 15 per week. I track them just for the week, but we do find that many of those continue on to do well. And as part of your Decision Point Diamond subscription, you also get a trading room for only members. And so that one is very small. And in fact, I'm doing one in about half an hour. Very excited to talk to my subscribers again of the Decision Point Diamonds. But that is all I have for you today on your Daily 5. I want to thank you for watching. Have a great weekend and a very successful trading week next week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.